So obviously there's been a lot going on in the insurance world and this is the first time in this area that we've gone through this. We've seen other areas close by go through it with Ian and Irma. And we've been on the outskirts of it. So this is the first time that we've kind of been dealing with it in our backyard. Um, just to kind of update you on it, I ended up having some flooding in my house from Milton, so I'm learning even more from an insured perspective on flood insurance and how the whole process works. So again, just a huge learning experience. Um, I would say I just did want to throw out one thing because we've been hearing from a lot of people following Ian, had heard from a lot of people after Ian, and we're hearing from a lot of adjusters that the flood insurance payments can take 4, 5 months to pay out. I actually just got notice this morning that one of our flood insureds is getting their check in 8 to 10 days. They just got their estimate. So I feel like that's really good news that they're actually moving kind of quick on that, quicker than we expected. So I just wanted to make sure I threw that in there before we get into the meat and potatoes of everything here today. So hopefully we'll start to see more and more people getting their payouts here soon. All right. And Sean, did you have any specific questions you wanted me to start on or?
Yeah, so I've been hearing over towards the beaches that people are dumping their houses. Like basically they're just going to take the flood payout and they're just going to sell the house as is. So a number of people have been saying that they're going to do that because with the FEMA 50% rule, like they're not going to let them bring the house back to its previous state. There's not going to be enough. Not that they're not going to there's not going to be enough money to let them bring it back to the previous state. So, basically these people are either going to sell like as is, or, A or B, they have to tear it down, rebuild it. And a lot of these people won't qualify for construction loans. They're not the easiest, loans to qualify for. And then, the question is like with these appraisers, like how is the value how are they going to determine the value? I talked to one appraiser, they're saying, well, they may have to do a pre-hurricane value and a post-hurricane value and maybe like do adjustments based off of that. So I mean, there's a lot going on.
For the market value for when you put it on the market, as far as that value goes, or the appraisal for the 50% rule?
Well, so I guess if we could just hit on first. So can somebody take their flood payout and just sell the house as is? And like, could somebody because I don't think homeowners insurance, you can take a payout and just sell the house as is without fixing it up.
Right. So it's a little bit of a different game with flood insurance. With homeowners insurance, they're going to put recoverable depreciation in there. They're going to keep money back until they have proof of repairs, and they're going to want to follow up and make sure that you've repaired the property. So it's a bit harder to walk away from a house where like a tree fell on it. Because if you're waiting for your home insurance payout, you want to make sure you're getting the repairs done so you get all of that money to cover the costs. With flood insurance, they don't have any processes in place. FEMA doesn't have any processes in place to follow up and make sure repairs are completed. So in general, as far as that goes, you can just take your check and walk away. There's a few things to keep in mind though. First thing is that FEMA will never pay on flood damage twice. So this is actually something we're starting to come across in pretty significant manner. And I'm kind of getting this out there to warn people who are looking to buy properties now, we've come across some people who purchased a house earlier this year. The house, let's say Shore Acres area. I think that there's a good amount of this there. The house flooded during Idalia. The owner at that time got a flood payout, 60, 70, $100,000 to replace all the flooring, drywall, cabinets, and appliances. Instead decided to just dry it out and call it a day and not fix or repair anything. And then because it was an investor who turned around to sell the house, they put on their disclosure that they had never lived in the house and didn't know anything about it. So nothing about it flooding, nothing about damage. Buyer buys it, has no idea it flooded. During Helene, ends up with 4 feet of water in the house, goes to file their claim for, get their claim paid on their policy they've been paying premium on, and find out that FEMA is not going to cover most of their damages, not going to cover any of their appliances, not going to cover their flooring, not going to cover their cabinetry because there was a prior loss, FEMA paid out on it, and the damages were not repaired. So that's the one big thing to keep in mind if you're walking away from it. Somebody does need to repair that damage. Otherwise, FEMA won't cover it again in the future. And that's just FEMA saying we won't pay on something twice. Now, the flip side, the other side of that is when you do have a flood claim and it's still open, right? And you're waiting for your check to come, which, like we said, some might start coming sooner than others, some might take longer than others. It all just kind of depends on that. You have to keep your flood policy in place if you sell the house. So we've just found this out very recently. If you have an open claim, FEMA's not going to let you cancel your flood policy. So even if you sell the policy, you're no longer owner on it, you have to keep your policy open until that claim pays out. So a few things to keep in mind there when you're going through that process. And really just the biggest thing that I would say is that, it's really massively important that people are working with realtors or someone who understands the contract, even if they're trying to go to an investor and just sell real quick for, their mortgage value so they can walk away from the house. You just want to make sure you've got it all figured out and in writing with that claims check payout. Is the buyer keeping it? Is the seller going to get it? Are we including that flood payout in the cost of what we're selling right now? Is it going to stay to the buyer, to the seller? However it's going to be worked out, you just want to make sure it's all worked out ahead of time and everybody knows exactly what to expect. So there's no major issues there.
So what does somebody do if they're in the situation so I have a client of mine that I talked to owns a property and it's an investment property. It was damaged, significantly. They have $1 million loan on it. And if they're not going to qualify for a construction loan, what do they do other than take the money, sell the house as is, the flood claim, take the money, sell the house as is, and move on? I mean, what do they do?
Right. It's unfortunately a lot of people are kind of facing that because, that's the FEMA 50% rule, which do you want me to kind of dive into that and how it works?
Sure. Yeah.
Yes, please.
Okay.
Yes.
Okay. So the 50% rule, so basically this is something that's always been in place. It's just now, a real shocking point because everybody's facing it who experienced damage. But essentially FEMA decided that they had a couple of choices. One was to no longer allow anybody to build or repair or renovate or update or fix a house in a flood zone because they didn't want houses still on the ground floor in flood zones. They wanted every house in a flood zone to be up to code and built up so that flooding would be less likely. So as a compromise, because it wasn't really fair for them to say, hey, nobody can rebuild or do anything here, again, they decided on the 50% rule. And what they did is they basically just said for any community that wants to participate in the National Flood Insurance Program, and essentially if you want to be able to get flood insurance in your municipality, you have to participate in FEMA's program. You have to put building codes in place that follow their guidelines. So they just came out and said, we're going to put this 50% rule in place. And what that means is if you want to substantially improve a property in a flood zone, or if you experience substantial damage on a property in a flood zone, you can only repair it if the repairs are less than 50% of the market value of the structure. And then they said if it's over 50% of the market value of just the structure, not the land, then if you're in a flood zone, then we're going to want you to build up to meet current building codes because that house needs to basically come up to current code so it doesn't keep flooding in an event like this.
So the current code is either A, put it on stilts, or B, raise the ground level, correct?
Right. It's essentially every municipality has a slightly different rule. Some want you just at base flood elevation, some want you a foot above, 2 feet above. They all make the rules there, but your options in that case, if you have to build up, are either to go to stilts, mainly if you're right on the beach and there's wave action that would be taken into account, or to make your whole first floor storage or garage and then put a second story on top and make that your first living floor if that puts you up high enough. Or to tear down and completely rebuild with, elevating the home, meeting current building codes. So it's basically just about bringing houses up and elevating them so that water can flow freely underneath them. So normally when you're going to renovate your home in a flood zone, a lot of people didn't realize it, or they may have if they've had conversations with their contractors, but when your contractor was submitting those permits, they had to work around that 50% rule. They had to submit a few permits here, permits there, but you didn't have to do permits for flooring, cabinets, all the things that you didn't need permits for, they never knew about. So it was mainly just your big ticket items that the county knew about. And if that hit 50%, then you had to build up. So it really wasn't a big deal on substantial improvement unless you were tearing down or adding stories or adding a lot of square footage. With substantial damage, the game changes a little bit. And the one thing that I want to be really clear on is that FEMA is not very specific on their guideline here. They just put out this blanket, this is what you have to do. And it's up to every municipality for how they want to implement the rule, the 50% rule. So what you'll find right now is a lot of confusion because, well, I talked to my friend who heard this, who heard that, and it all just depends on what municipality you're in and what their building code requirements are. Um, so you hear about a look back period. So what happens is when they're reviewing these permits to see if you're going to hit that 50% rule, some of the municipalities have a look back period. So they'll say, we'll look back over the last 5 years. And if you've submitted permits over the last 5 years, those are all cumulatively going to go towards that 50% rule now for a permit you submit. Other communities only go back a year. It really just depends on your actual building department. You have to talk to them. The thing that's happening with the substantial damage is the communities, because they know if they don't follow the rules here, they're going to get in trouble. They're really cracking down. So they've all gone out and done inspections on properties that flooded. You see those inspected signs on the houses. And the ones where they know that there was a substantial amount of flooding, when you go to apply for permits to rebuild, when you get to talk to your contractor and they go to submit a permit, they're going to have to go through the substantial damage permitting process. So rather than just submitting a permit for drywall, electrical and plumbing, the permits now require the contractor to list out every single thing that's going into the cost of bringing this house back to pre-storm condition. So tear out is included. Drywall is included, flooring is included, cabinets are included, paint is actually paint might be the one thing that's not, but every little thing that they are looking to spend to bring your house back up to pre-storm condition is getting included in this 50% rule. So it's a lot more involved and a lot more information they're asking for. So it's a lot easier to hit the 50% rule than it was when you were just doing improvements.
And that's even if the person's like going to pay cash for something and they like.
So here's the kicker. Even if you had volunteers come out and tear down, if you got donated materials to rebuild, someone gave you flooring, donated flooring to you, even if you have your friend coming to do the work for you for free, the county is still going to put a value on all of that. They're going to put an estimated value on how much it would have cost you to put that in, and they're going to put that towards your 50% rule. So really the biggest thing right now is if you don't want to build up and you don't want to do that, the only option is to really work with a contractor, and it's got to be done as cheaply as possible. No upgrades. No, this is not the time to redo your kitchen. This is not the time to move a bedroom around. While it seems like a great idea because the house is torn apart, why not upgrade and do all the things I've been wanting to do? It's not the time if you don't want to have to build your house up or sell. It's the time to put in the bare minimum, the basics that you need just to get your house back to a livable condition, and then look at that down the road. Because they're just going to look at everything you're doing all together at once with that one permit. So if your contractor can get that one permit under the 50%, you'll be okay. If not, that's when you have to face that. Now, also keep in mind, you can get a private appraisal done if you don't agree with the market value of your house. I know that some communities have started talking about trying to send out new estimates for market value because they know it's really low. And we've always enjoyed it being really low because that's what we get taxed on, right? So we don't want it high. But you can get a private appraisal to try and increase the amount you have there and increase your 50% value that you have there.
I had heard that from an agent that they're putting some they call it like red bags on doors where they won't even allow that home to be basically fixed back up. They're requiring it to be rebuilt. Have you heard any of that? Like they're just saying, hey, this house has to be built up to code.
If they're condemning houses, then yes, that they would need to be torn down. And I have heard that they've gone around and looked at some houses and condemned them.
Okay.
For condos, that's a really good question. That's a really good question. Because I don't think that they can require the whole building to be torn down and rebuilt just because I would have to look into that a little bit. I have not had that question yet. And I've not come across it as a general rule, but that's an interesting question, and I will look into that and find out, and I can send that out over to Sean.
So that would have to do with the master insurance policy. So a condo project master insurance policy, is their flood insurance typically through the NFIP as well too?
Usually, yes. Yeah. It's called an RC BAP in that policy. So when they have a flood insurance policy, it's going to cover the whole building, and it covers the interior of the units, everything built in. So, I mean, in that situation, you may not hear about it as much because the market value of that condo building is probably significantly higher. And so your 50% in general is a lot easier to get around. But that's really interesting. I'd be interested to look into that because we do have some small condo buildings and associations on the beaches that did flood that, were from the 40s or 50s and on the ground floor. So,
And,
it's quite possible they'll have to tear down and rebuild in those
and
cases.
let me guess, the HO6 policy, the homeowners insurance policy from the drywall in, that's not going to cover those people. They would have had to have a separate personal flood policy for their, well, is contents coverage, is that considered countertops, flooring, appliances, if they
No,
had a separate flood?
so the content, the countertops, flooring, fixtures, all of that would be covered by the association's flood policy. So
Oh,
therefore,
really?
that's why as lenders, you guys are you're okay as long as the association has a policy that either covers 250 or the replacement value of the unit, because their policy covers all that. And the reason is that the NFIP doesn't have a flood. Like on a hazard policy, they can write a policy that says we're going to cover everything from the drywall out, and the homeowner is responsible for everything from the drywall in. But with flood, they don't have policies written like that. It's basically just we're going to cover everything on the dwelling that's built in. So that's why it's a little bit different. So the unit owner would have to carry a contents policy to cover their belongings. The problem
Okay.
is you have an HO6 that's like, $800, $900 a year, and then you quote contents flood for 25,000 of contents, and that was $700 a year. Not many people previously were taking that coverage because it's very pricey comparably. Now, hopefully that thought process will be a little different, but it
Especially if
left a
they're on
lot
the
of
first
people.
floor. Well, I'll certainly bring it up now if somebody's on the first floor. Hey, by the
Right.
way, and I would have never even thought about that before,
Yeah, no,
right?
I mean, we're changing our guidelines too. Like now we're automatically going to send a flood contents quote for anybody in a flood zone in a first or second floor condo. Just automatically going to do it even before where it may have been just a conversation.
That's a good
Um,
idea.
yeah.
Okay, so the master insurance policy, the flood policy as a part of the master insurance policy will cover flooring, countertops, cabinets. You're saying that
Yes,
should cover all
everything
that.
built in. And I see that comment there that they only cover the drywall. I would be interested in seeing the claims payout and information on that because that policy should include everything that is just built in, not anything like added on, like if you added on window fixtures or things like that, stuff like that might not be covered, but drywall, flooring, cabinetry, fixtures, those should all be covered by that
Appliances.
policy. Appliances, ones that are there for the building and then that would not be taken away should be, but that could get a little bit dicier on an RC BAP. I'd want to see a policy payout and see exactly how they estimate that out.
What about the
I know
air
on a
conditioner or hot water heater?
it should be. I know on a homeowner's flood policy, those are all considered part of the building, the dwelling
Okay.
coverage. So it should be that on an RC BAP, but again, RC BAP can be slightly different. So I would want to confirm that and look up a policy.
So a friend of mine who lives in Madeira Beach, his house got flooded 3 times now in the last year. So he is talking with a contractor. He's going to use different products inside the house. He's not building it back to code. He's just basically he's going to use a different type of flooring where if it gets wet, it's not as impactful. A different type of like instead of drywall, he's going to use. I can't remember. He told me this last night. It's actually going to go like the whole way up. So it's yeah, and then for cabinets, they're going to use some type of cabinet that it's okay. Like if like they get wet, and then also for appliances, they're going to do some type of appliance that kind of is off the ground. Some. Um, so is FEMA paying out multiple claims on the same home? If they did fix it up, is there issues with that?
They
So
cut it back to 25%, don't they? Once it's a multiple event, they don't do the 50% rule.
that I've never heard of, that it would be 25%. But what they'll do is once you have, okay, hold on. Once you have four claims that equal $5,000 or more a piece, or two claims that equal the market value of the structure or more, with two of those claims happening in a 10-year span, Pretty sure that's all right. Then you become a severe repetitive loss property. Once you become a severe repetitive loss property, the only way to get coverage is through the NFIP Direct. It's more expensive. So there's that route there. And then otherwise, starting in April of 2023, they put into place the prior claim surcharge with the risk rating 2.0 rate factors. And what that says is once you have your first claim after April of 2023, it puts you in the trigger for that. Once you have your second claim after that, so you can file one claim, and then if you file another one, it triggers that prior claims surcharge. So then they'll go in a 10-year look back period, and if they see any claims in that last 10 years, you'll get surcharged for each one of those. So we haven't seen those rates yet. We haven't seen what those numbers look like yet. We will coming up on our renewals in 2025. But then also a lot of those homes might get pushed into the severe repetitive loss program. So I've never heard of it going to the 25% after that. I would have to look into that. But they would still fall under the 50% rule there. And, it is a situation where the policies can continue to pay out. As long as
do you
you're
mind
making
repeating? Do you mind repeating that you said 4 claims of $5,000 or more, or what was the other part?
or 2 claims of the market value of the structure or more. Yes, Jason.
Thank you.
Did I mix it up? Okay, all right. Yeah, I've tried so hard to memorize that. I hope I didn't mess it up, but usually
We're gonna have to put doctor in front of your name.
Sure.
Well, I didn't go to that much schooling, but
Somebody had a question in the chat. I'm having trouble pulling it up though.
Yeah, just so you
Me,
know,
I can-
all of us
I can
at
say it
Florida
out
Best
loud.
Quote. I was just going to say, all of us just tell Lindsay all the time. We just wish we had her brain because she does know everything. It feels like
it only works for insurance related things. Everything else just goes in and out. So it's it doesn't help me in the rest of my life.
So Joel had asked, he wanted to confirm the 50% repair cost is determined by the contractor's permit. That was his question.
Yes,
Correct.
that's
So
fine.
they're going to have, and you can pull it from, if you go to the property appraiser site and you pull, you can pull, I could probably grab, I don't know if I emailed it to you, Sean, or not, for Pinellas County, but they have the whole permit there
Pinellas is easy.
to look
Yeah.
at.
Yes.
I can grab that and send that to Sean.
So specifically for my case, it is in Pinellas County. And so the tricky part is we're trying to make everything work. So I have 2 questions and I won't take up too much of your time. So one, I just wanted to confirm that the 50% is determined not necessarily by the county or the inspectors, but by the licensed contractor that is pulling the all-inclusive permit for the repairs. Is that correct? Is that the number they're using to determine that?
From my understanding, that's the way it should work. Now, if they have made a determination on their own of condemning the property or anything like that, I can't speak for that.
Right.
So again, every municipality has its slightly different rules. So even within Pinellas County, Madeira Beach is different than Reddington Shores, is different than St. Pete Beach. So you definitely want to go to the county. But as a general rule, once they're determining first that you meet that substantial damage. So just to give you an idea, my house in Largo just flooded a little bit. I definitely did not hit substantial damage, so I only had to get a permit for my drywall. I didn't have to list out everything on the substantial damage permit. But if you are in that substantial damage qualification, then that's where they would figure out the 50% rule.
Yeah, it was 4 feet. It was substantial.
So, yeah.
So how do you know if they're going off of the quote or the actual scope of work? Because there's certain particular items that may be on the estimate or contractor bid, but they won't pay for certain items based off the scope of work.
They're asking the general contractor to fill out this form. So they have to fill out the permit for you, and they have to put in itemized every little thing that they're doing. So it could be different than their scope of work. I don't know exactly how that works. That'd be a general contractor question. But they do have to fill in the information accurately on the permit that they're completing.
Yep, that's correct. I've done it many times before in the past life. So yes, they ask for an overall project cost, and for the substantial damage, they might ask for more information, but usually it's very broad general questions and not super specific for the permit. A second question I have is, I know a lot of people are probably running into this. So there is a overlay between the discussion with the insurance adjuster and what they are saying the damage cost is and what they'll pay out. And then there's also the 50% rule in the permitting that we're dealing with the county. Those are two things happening at the same time. My question is there crossover? Do people know what's happening on the other side? What I mean by that is, I'll just make it really concrete. Let's say, for example, insurance says, hey, determined on the damage, we're going to pay out 100 grand. But let's say based on the 50% rule, we're going to pull a permit and only do $50,000, $60,000 worth of repairs just to make sure that we don't trigger the county to want to push us into a whole nother realm. Is that okay? Are those two completely separate things happening at the same time, or are those combined things that we have to make sure all match up?
Good question. So they are separate. Your flood insurance payout, what the NFIP is paying out to you, is based on the damages that the adjuster sees at the time of the loss. They're going to pay that money out. They're not thinking about the 50% rule. They're not looking at the 50% rule. It's not in the scope of that whole process to consider that. It's up to the county or the city to determine the 50% rule. So you've got two separate things happening. So your flood payout, you'll get that full flood payout, even if they pay out 250,000 and your permit that you submit is only for 125,000, that they're not going to communicate on that. There's no issue there. You'll get your full flood payout, and then you go back to your contractor and determine exactly how much it is to bring everything back up. Because think about it, FEMA is going to pay out for like with like. So if you had granite countertops and high-end cabinetry and things like that, they're going to pay out on that. If you wanted to put it back with low-end cabinetry and a different type of countertop to try and keep the cost down for the 50% rule, that they're not going to stop you from that. The only thing to keep in mind is just that if there is damage that FEMA paid out on and you're not getting it fixed at this time, if you flood again, they're going to keep the record of all the damage estimates and all the photos. And if you flood again, they're going to look back and make sure everything was fixed. So the one thing I would say is just make sure that everything is dried out, cut out, replaced and repaired as they're at least estimating it needs to be. So don't leave like a back room with all the flooring in there or something like that because it wasn't that wet. That might end up damaging you in the future. But otherwise, your flood payout is very different from when you're submitting your permits to repair.
Excellent. That's wonderful news. Thank you.
You're welcome.
Is there a time frame that they consider that the homeowner is being negligent for not making the claim? Because a lot of people are still getting quotes, they're still getting estimates, and they're supposed to mitigate for future, damage. Like, where are they determining, that it was negligent? And if it rains or something.
So you have in your contract that you have to protect your house from further damages. So it really is best as soon as you have that claim, you file it no matter what, and just give them the information so they can start the process. And then you begin the dry out process immediately, begin the cutout process, get the wet stuff out. You have a duty to protect the property from further loss. So if you fail to do that and fail to take the steps to protect it, if it was wind damage and you fail to put a tarp on, or fail to keep, if a tree's hanging on the house and you fail to remove it and take the steps needed to protect the house, that can impact your policy, because that could then fall into a category of you did not take your duty to protect the property. So my biggest bit of advice would just be, even if you're waiting for bids, file the claim and start the repairs. Unfortunately, that usually means some out-of-pocket costs. Some contractors are willing to work with insurance and only take a small amount, like your deductible up front, and then they'll wait for the insurance to pay out to get paid. Others understand that the payouts can take a significantly long time, so they ask to be paid outside of insurance. So it might be a matter of having to make to pay some costs up front. FEMA can assist in different ways in this scenario. I'm not with FEMA, so I can't speak specifically to exactly how it will work, but they do have loan programs. What I have found out in speaking to people who've been through this before is that if you get the FEMA loan and then you're waiting on your flood payout, then once you do get your flood payout, you have to put all that money towards the loan to pay it off, because FEMA will never pay twice. They'll never duplicate insurance payments. So they can help with the overhead costs before you get your check, but they're not gonna pay you, $500,000 because you got $250 from your policy and $250 on the loan. But so basically I would just say, get the get the claim filed immediately. You want to get in the line. You want to get in with an adjuster quickly, get that process started, and then just take the steps as you're getting your quotes and whatnot. The repair process, there's not really a timeline on that. It's just more getting your claim filed and getting the steps taken to protect the property.
What do you know that lies under emergency services? Because those get paid out pretty quickly versus like the bigger amount. What lies under being covered as emergency services?
So are you talking flood or homeowners insurance?
Homeowners insurance, they like when you tarp, they usually will get that paid out real quick because it was to prevent future damage. So I was just wondering what are considered emergency services payouts?
A lot of that's going to depend on the specific homeowner's policy that you have in place and the wording in the policy and how that carrier works. Some of them cover things upfront immediately. Others want you to pay for it and get it done, and then they'll reimburse you after. So that would be a question for the adjuster to read the specific policy terms and with the carrier and figure that out. With flood insurance, they'll give you an advanced flood payment, but you have to request it. So they'll give you an advance payment that's usually based on a percentage of the estimated loss that they think, is a safe amount to give.
Well, I just have a scenario with a lot of my properties right now of owners that were getting quotes, estimates, and some of these deductibles are $10,000. So that's the holdup of if they're making a claim.
So they have a year to make the claim. Usually what I tell people, because it's pretty late in the season, but there was a storm out there. Hopefully we won't have any impact from that. We do have meteorologist Jason Mears here with us, so he could let us know. So as far as your hurricane deductible goes, it is a pretty high deductible. It is an annual deductible. So it goes from January 1st to December 31st. So once you do file towards that claim, it reduces your hurricane claim for any further losses. And a hurricane claim should not impact your rates on hazard insurance or your ability to get coverage down the road because it is an act of God. So generally speaking, I would say it's a pretty good idea just to file the claim and get the deductible amount reduced. The one thing to keep in mind is that once you do file that claim, even if they're not paying out because it's under the deductible amount, they are going to want proof of repairs. So historically speaking, when we have a major disaster event like this, it takes the carrier anywhere from 1 to 3 years. But at that time, they're going to turn around and say, hey, we need those proof of repairs. You had a tree limb on your roof. Did you replace that roof? We need pictures. We need documentation. Or when you go to get a new policy in place, they're not going to surcharge you for that hurricane claim, but they are going to want to know repairs were made and that there's not existing damage. So filing the claim in that scenario, the biggest thing just to keep in mind is that you're going to need pictures of damage, proof of damage, and then pictures of repairs and proof of repairs. And you need to keep those on file for, I would say, at least 3 years until the carrier asks you for them, potentially even more. Really it'd be a good idea to have them for 5 years.
Yeah, because would they actually carry that over to a new buyer if they made the claim, but they didn't have proof of the fix, and so the new buyer could have problems with maybe getting a policy until they get something.
Yep. So when we write a policy, if we find out that there was a prior loss from the seller, that loss does follow the property, and the new insurance company is most likely going to ask us for proof of repairs. And so that can be really tricky if the seller either sold to an investor, so then they don't have it, and now we don't have that information, or if the seller didn't keep it, didn't document it, we're going through a traumatic situation, they forgot to keep it or keep the records of it, and now we have no proof that anything was done. It can make it harder to get insurance down the road.
It's okay. It's not.
How long does that stay with the property, that record? Like forever?
It will always show up. A lot of the clue reports only go back 5 years, but for some of your major losses, they can show up longer than that. Like a sinkhole claim will always show up, a fire claim will always show up. But at least 5 years is when the carriers look back to see prior claim status. Again, hurricane claims they're not real worried about that. There's not anything you could do about that. The bigger issue there is like water damage, pipe burst, things like that. Those are the ones that carriers are more concerned about.
That's good information. And the hurricane deductible is exactly what it is. That's any damage that you receive to the home due to a hurricane.
Right. If there's a named storm in the area, it falls under that hurricane deductible, which is usually either 2% or 5% of the dwelling coverage.
And they don't pay that out of pocket per se. It just comes out of what the insurance company is paying out to the contractor, correct?
Correct. They will give a total estimate for the amount of damage. So if they estimate the amount of damage is 50,000, your deductible is 10,000, they'll pay you 40,000. If your contractor is able to do it for 40,000, you're good. If your contractor says something like, we'll cover the cost of your deductible, or we'll do it like that, that gets a little bit more into an insurance fraud type of situation. So just be worrisome about that. Those are not a good
So is
situation.
it 2% or 2.5%? I've been told 2.5 is the deduct, but like, is there a percent? Who determines that percentage?
It's on the policy when it was bound, and it's on the declarations page. I've never seen 2.5%. It's
Well,
always
you guys are good too about, like, when you email the client a quote, you'll give them one at a 2% hurricane deductible and one at a 5% hurricane deductible. Or like, you'll do 2% hurricane deductible and you do cash value and 100% replacement cost. And then sometimes I'll email you, hey, could we see a 5%, if we need to save money.
right. And this is kind of something to keep in mind moving forward, because we actually just had a massive storm or office meeting yesterday where all of our agents, our whole team was in on it. And I mean, we're putting in place new guidelines. So now when you see a flood quote from Florida Best Quote, it's going to have a sheet that's going to tell them how much the quote is, with 0 contents, 25,000 contents, 50,000 contents, and 100,000 contents. We're going to also give a private market flood quote that gives optional coverages like loss of use, because that was a big thing, pool coverage, things like that. So we're just going to be giving a lot more information to people so they understand better what they're getting when they're signing up for the policy.
Does that mean it might take a little longer to get quotes now?
It shouldn't.
Okay. Okay.
We've got a form all set up and it's just got to be typed in. It just might be, they might see this super low number and a super high number, so we might have to explain it a little bit more. But it's just a matter of making sure that people are as educated as possible about what they're getting. I did see the question about when I said FEMA never pays twice. I mean, they never pay twice on the same damage. So as long as it's repaired and fixed, then if it floods again, they'll pay again. But if you don't, like if they pay for your cabinets in your kitchen and then afterwards your contractor's like, I don't think they got that wet, we don't really need to pull those out, but FEMA paid to pull them out and put them back or replace them, and you don't replace them. If they paid to replace them and you don't replace them, then that could be a problem for a future flood claim, because they will go back and look at the entire estimate, review it, and then they'll figure out exactly what they paid out on, if it was fixed and replaced or not, and then that's how they'll adjust the new loss.
You have mentioned loss of use. Is that mainly for businesses, or would that even be considered for a person who works from home and their office is located within their home and they can no longer do business? I mean, like what's the loss of business? Like what policy or addition is that to the?
So if you work out of an office, then there's loss of business use on the commercial policy that you would have. For homeowners insurance, there is a loss of use. There's loss of use coverage included in the policy. So that would be usually a percentage of the dwelling coverage. On average, it's about 10% of the dwelling coverage. So they would pay out for the loss of use of the property if the damage to the structure was caused by wind or rain or something a covered peril on the homeowner's policy. So whether they use that for a place to live or for a place to work out of temporarily, that would be up to them. But the carrier will just pay out either way. They won't pay out a specific, like, this is to get a place to work and this is a place for your home. Flood insurance, if you go through the NFIP, does not have any loss of use coverage. So everybody who flooded is pretty much on their own with a place to live or getting FEMA assistance for a place to live.
Yeah. So all of my rentals that I'm renting out to people that have been misplaced due to the storm, they can potentially get some of that rent money back as they're rehabbing their house or should I tell them that or no?
Only if their damage was by wind,
Okay.
and on their home is filed on their home policy and the claim is paying out, then there could be loss of use coverage. But that would be, I would not guarantee anything to them because the only person who can is an adjuster. I would just tell them if they have hurricane or wind or rain damage, to go through their adjuster and talk to them about that, about loss of rents. As long as they have a correct policy form, a DP3, there should be loss of rents and coverage included on there. If they don't have a hurricane loss and there's no coverage on the home policy and it's not paying out, there would not be coverage for that. Flood insurance does not have that. So
the surge wouldn't be applicable.
No, no. And FEMA, unfortunately, does not have assistance for non-primary residences or investment properties. So that it's tricky. I mean, it's tough. A lot of this is, when you think about the 50% rule, and I always thought about it looking at like Louisiana and these houses that have been paid out on 5, 6, 7 times, and FEMA being so far in debt, you're like, oh, well, it makes sense. They should build up. Why keep flooding over and over again? The law makes sense. The rule makes sense. Then you get into the situation and you really see it in practice with people who just suddenly lost everything. And it's cruel, and it's hard to fathom and wrap your head around that somebody who just, due to no fault of their own, lost every earthly possession they have in their home, and their home now has to try and figure out how to put 300,000, 500,000, $1 million into trying to rebuild it up to code. And it's heartbreaking. So the other thing, the flip side of that, is that flood insurance is not a policy meant to make you whole. A homeowner's policy is meant to make you whole. It includes loss of use. It includes a lot of different coverages that protect you, and it's meant to bring you back up to, rebuild the full replacement cost of your home, and includes lots of extra coverage to build things up if it's required for permitting or ordinance of law. But a flood insurance policy doesn't do that. You only get 250,000 on the dwelling, 100,000 on contents. There's no loss of use. They didn't put the policy and build the policy to make you whole. They built it to try and keep the amount that FEMA had to pay every time, just through grants and loans. They try to keep that money down. So they said, let's just put this policy in place, and then we'll just cover what's above and beyond that in losses. So it's tough.
We do have a 100% financing program for FHA for the next 12 months, where somebody can do a 0 down loan on an FHA loan. So like you have renters that were displaced, they can do 0 down FHA loan for the next 12 months if they were displaced from their home or their home was damaged from the flood. That's for somebody that's renting or that owns a home. Okay, so
is there any requirement on the amount of damage that you have?
They have not informed us of that. They just said, like, if they were displaced, or like in my case, well, they were on the second floor of a condo and the whole first floor was flooded, but there's like, mold coming up, the walls, and the elevators are broken, and they live on the 4th floor and they have young kids. So I think they'll qualify for it. Now, I haven't closed one of these yet. So great question. Yes, good question. And like, we don't have to count the mortgage payment that they have existing against them if they're buying another house either. So, which that's surprising. And for any of your homeowners that, like, we had a first-time home buyer that moved in their house, and they were displaced 2 weeks after they haven't made their first mortgage payment. So we're letting them put their first mortgage payments on basically on forbearance and put them on the back of the loan. Where we had originally thought they'd have to pay all 3 months at the end of the 3 months, some servicers will allow them to add them on the back of the loan. So people just need to contact their servicer if they're having trouble, like, with their mortgage payments. So, well, thank you very much for your time. I know you could probably talk for the next 5 hours.
Probably.
Yeah. You're loving Friday nights, I'm sure, when you can cool your brain down.
Stop thinking about flood insurance. Well, then I got to go figure out my own house. So it's, it's just looking forward to December, when hopefully be a little past this.
Lindsay, if any of them want your contact information, do you just want me to share like your office line, your email address? Is that preferred?
Yeah, I would say email address and office line is good, but I am doing a lot of these, so my phone rolls over to Matt quite a bit. So either the 813-850-2222, and then you'll get Matt, or you can leave a message on his phone and he'll let me know, or the 727-584-9999. That one's answered all day long. And if you say that you're looking for me and that you need to talk to me or have a question for me, the staff will get you over to me.
They also have awesome agents there too. Lindsay's not always like, some of the other agents are more readily available because she's also like running the office. So
the agency director.
Yeah.
I don't do any of the quoting and binding, but I'm always available for questions, issues, if we come into problems or something like that. I'm always available to jump in and help. So.
Well, thank you, everyone.
Can I leave you with one good piece of information here?
Do it.
The next time Lindsay and I join you, hurricane season will be over.
Boom.
It's coming quick.
December 2nd. We'll see you.
Yes. All right. Thank you so much, guys. Reach out if you have any questions or any issues.
Appreciate it. Yeah. Thank you, everyone.
Thank y'all.
All right.
See you. Bye.